We're seeing rand strength in today's session. Any particular reason that we're seeing the rand on the front foot today, given the fact that commodity prices are coming off?
Yes, we went home on Tuesday to a public holiday with the rand trading up near 7, and really looking like we could potentially test high. I think we got up to 703 in late trade. We came in this morning, dollar rand had breached through the 90 level. We saw some early demand for dollars, driving it up to 93, but I think, as you've said, against the crosses, the rand is holding in very well. Commodities have come off. I think that's really on growth concerns. But I think foreigners still looking for yield. So they're going to look at your emerging economies, they're going to look at the high yielders. And I think that's, for now, the rand still has a very positive spin to it.
And it seems that whenever we breach that key 7 level, we just keep bouncing back. We're seeing quite a lot of resistance met there. But we also saw some interesting notes out of the Bank of England and ECB yesterday, and really showing the fact that a lot of the committee is really for interest rates remaining unchanged in the UK and staying flat in the Eurozone. So again, bringing up that yield differential, and this is why we're seeing a lot of rand appetite.
Yes, you've got this tussle between fighting inflation and looking after growth, and it just seems like the tension has now shifted away from inflation concerns with commodity prices coming off, and our global economies worrying about growth. We see this from the BoE, we see this from the Fed, and I think it's no different for South Africa. So our interest rate market 2 weeks ago, after our interest rate committee meeting, started pricing in aggressively chances of hikes within the next 9 months. That's been taken off the table. 50 points has been taken off the table in the last week. So now we're only pricing in 50 basis points within the night, let's say by November, whereas September was almost a certain. So very difficult to call from an interest rate perspective.
And it seems a lot of people are divided as to what the next move will be. Of course, we're chatting to Chris Harmse in a little while, and he's of the view that the South African Reserve Bank will probably not be hiking rates because it's not really, the inflation scenario is not being pushed by the consumers. It's not demand driven. If we do get this interest rate cycle wrong, what does that then spell for the local currency?
Well, I think it's still positive for the rand. Bill Gross from PIMCO, one of the biggest investors into the emerging market bond funds, was saying that emerging economies would be rewarded for fighting inflation. So, naturally you want to be seen as combating inflation, even if it's to a smaller degree. But, if inflation's not a massive concern anymore, and particularly core inflation, which has been driven by commodity prices, well, there's very little argument to hike rates aggressively. We need to stimulate jobs, we need to create jobs. And I think this positive growth path in that impact would definitely be the route we would take.
Fascinating. I mean, this euro-dollar cross, I look at it with awe. I mean, 142.56 is where we're at right now. Currently flat at this point. Interesting to note, we're not seeing immense dollar weakness. We know that the US debt ceiling, of course, that has been breached. We know that that should then be extended even further. A lot of focus on the debt scenario that is playing out in the US, and then you've got this drama that is playing out with Dominic Strauss-Kahn with the IMF as well, and a big focus still remains on European sovereign debt. The play between all of those three factors, what does that then say about where the euro dollar is going, and how would then one play into the volatility?
I think obviously short term we've seen a massive flush out in long euro positions. Short term holders have been tested to see if they really want to hold on to the positions, and I think, let's say on a 3-month view, euro dollar will continue to appreciate. So more dollar weakness on the cards, and we should drift back to the 145 level in the medium term.
And in terms of what the effect will be on the local currency, we keep hearing about 674 around there being the next level for the dollar rand, and then we could even breach closer to that 6 rand level. What does that say about where the rand is going?
I think, as you mentioned earlier, we keep struggling to get through 7, the figure, and on the downside, the 660, 670 level also seems to be holding. So for now, objective down to 670, probably more realistic. But we'd probably need a sharp move in euro dollar to breach that 660.
And what's your play on the local currency? Long at this point, and what level?
Still long rand. Still like it. This 87 level, quite a big level to get through short term, and then potentially down to 680. Let's just say in the next couple of trading sessions.